Just like any company, the Federal Reserve keeps an exact amount of its holding. It's just that the Fed's balance sheet has a lot more digits. Now, there it is, Table 8 of the Fed's latest balance sheet. Total assets, $3,013,333,000,000. How big is $3 trillion? Let's look at figures people know. The market capitalizations of the two biggest publicly traded companies, Exxon and Apple, put them together and then triple that. That's $3 trillion. How did the Fed's balance sheet get so massive? Well, only a few years ago, it routinely carried about $800 billion on its books. That included everything from securities to gold to foreign currency. But the financial crisis of 2007-2008 changed all that. Lehman Brothers collapsed, credit markets froze, and stocks plunged. The Fed began furiously buying bonds and commercial paper. On September 17, 2008, the Fed held $996 billion on its balance sheet. Less than 2 weeks later, that had rocketed to $1.5 trillion. And by November, it held a gargantuan $2.2 trillion. In 2009, as recession gripped the nation, the Fed began buying mortgage-backed securities in a vast new program called quantitative easing, or QE, another effort to pump money into the economy. As growth lagged, November 2010 brought QE2, the Fed adding $600 billion more in treasuries. Its balance sheet kept climbing to $2.7 trillion by May 2011. In late 2011, the program known as Operation Twist saw the Fed buy another $400 billion of longer-dated treasuries and sell shorter issues in yet another bid to revive housing. Finally, in September 2012, QE3 added even more mortgage bonds to the Fed's portfolio. The end result? $3 trillion on the books, and signs of a recovery in housing and the economy. But the Fed isn't done yet. How much is the Fed buying now? $85 billion per month. That's $40 billion a month in mortgage-backed securities and $45 billion a month in treasuries to boost the overall economy. Today, the overwhelming majority of the Fed's assets fall into two very big baskets. Interest income generated by the Fed's bond holdings added $89 billion to the U.S. Treasury in 2012. That's a return of about 3%, compared with a roughly 1% return on assets for all U.S. banks. But at the current pace of bond buying, the Fed's balance sheet could hit $4 trillion by the end of 2013. Bernanke has said the Fed's balance sheet can't continue to grow indefinitely.